Welcome to the first in our Ardenwood Presents 3-month webinar series on the timeless blessings of planned giving. Today we'll present to you an overview of legacy planning. I'm John Mitchell and I serve as Executive Director and CEO of Ardenwood here in San Francisco, and we thank you for joining us today. You know, about a year ago, a longtime friend of Ardenwood passed away. This individual had very significant wealth, but no will, no estate plan, nothing to indicate his legacy wishes for his children or any of the causes he loved and organizations he generously and enthusiastically supported throughout his life. And so the government claimed an extra large portion of his estate, and his loved ones are still arguing over the remainder. This series is designed to help avoid such an unfortunate outcome. Without a plan, a considerable portion of your estate will go to the government in the form of taxes instead of to loved ones and the causes and charities of your choice. Do you know that more than 50% of the population does not have a plan or a will or a trust? It's just unthinkable, isn't it? It does take time to think about how you would like your estate, small or large, to be distributed. I had a conversation just this morning with a senior banking executive saying how people don't want to face the mortality. We all understand that. But as you'll hear in this 3-month series, there are many options to consider to make estate plans work for you strategically and lovingly. And that's what Rick will begin to explain today. We offer these webinar presentations and the follow-up Q&A sessions to support you through the estate planning process. Please be in touch with us with any questions. Our contact information will appear at the end of this presentation. I'd also like to add a personal observation. A lawyer is not often a specialist in long-term care insurance like Jim Maher, or a specialist in estate planning like Rick Bailey. As in any profession, one should be wise about contacting the right person for the job. I've seen numerous instances in which the donor's attorney did not have experience or expertise to understand the nuances of more sophisticated estate planning. And in doing so, they discourage their clients from availing themselves of really their best options. In the case of your estate, you want the right professionals. It'll make all the difference. Finally, the content shared today is only informational and is not intended to be legal advice. A replay of this presentation will be available on our website later this week. And now, let me introduce Rick Bailey and Jim Maher. Rick will give today's presentation, and Jim is here to help answer questions at the end. Rick Bailey is the founder and chairman of CAMUS and is one of the most highly recognized estate planners in the United States. As a certified financial planner, or CFP, with a master's degree in accountancy and taxation, as well as a Juris Doctorate, or JD, think lawyer, Rick Bailey is a highly valuable asset to private clients, CPAs, attorneys, financial advisors, and life insurance professionals for his expertise in advanced estate planning and case design. Jim Maher is a certified senior advisor and a broker consultant specializing in Medicare. He's also a certified long-term care insurance strategist. Jim has talked to more than 12 to 1,500 Christian Scientists since we had our first webinar back in 2020, I guess it was, Jim, yeah. Answering innumerable questions about Medicare, long-term care insurance, and estate planning. He's been a tremendous blessing to our field. And from what he's told me, he's loved meeting and working with all of you.
That's right.
And finally, as we begin, let me remind you that you can submit questions using the Q&A icon at the bottom of your Zoom screen. We'll answer a few today and the rest on Thursday during our Q&A session. Please join me now in welcoming Rick Bailey.
Thanks, John. I appreciate it. I think it's one, you really hit this whole planning process. And I think it's a process that we go through. And as I have up here is the title to the presentation, it's, this is the beginning of the planning, and it's really planning for you, your family, and what legacy are you going to leave behind? I think everybody gets caught up in the estate planning almost the nomenclature of it, of what is estate planning. They stop. But the planning is, what do you want to pass on? How do you want to pass it on? And really, it does take time and effort to do the plan. But at the end of the day, if you can take that time and really design it for you, you're going to appreciate the results. And so a lot of the questions I want to hit right up front. Does this apply to me? And the answer is yes. It applies to all of us, because at some point we're going to pass on, but prior to that, we're going to have the circumstances of, how do we want to be taken care of while we're alive if we need help? How are we going to help the loved ones around us? And so it really does apply to everybody, and you're not too old or too young to do the planning. I think so many people think this is something that happens when I'm older, but if you have young kids, how if you're not there, who's going to take care of them? How do you want them taken care of? And really, this is a plan it is a lifetime of planning, but it's a result. We're not after any particular document or any particular strategy. It's, can we achieve what you want to have happen? So it all comes down to you. I like thinking about this, and maybe some or all of us on the call can remember when these flip phones first came out, and it was amazing. If you think back, how many times it would have been nice while you were out driving to be able to call and get help or get directions to where you're going. It was a phone, but now we're up to these incredible computers that fit in our pocket. Think about the evolution that's happening in just the technology. I think iPhone's just ready to release version 14. I think they've had somewhere close to 20 versions come out. But over that time period, do we just use it to make a call anymore? Do we, all of these extra things that come up, this evolution? Well, as you get into the planning, your plan has to evolve. You're going to grow. Your goals may change. Tax laws may change. Family changes, goals, who you want your legacy to go to. All of these changes affect your planning. So when you start thinking about planning, it's not one and done. It's a path that you get on, and this plan is going to evolve just like you're going to evolve over time. If you think about planning is really taking your goals and matching your goals to the proper design. So if you want to talk, people ask me, what's the perfect plan? I can pull mine off the shelf and show you what's perfect for me. But unless your family, your goals, objectives, and everything match to me, it's not what you need. It really is, we're designing this for you. So if you think about this, think about putting this puzzle together. Each of these puzzle pieces, whether it's the family, whether it's the legacy that you want to leave behind, whether it's your retirement plan and your lifestyle, think about all those puzzle pieces. And I can add more puzzle pieces here if you have a business, and on and on and on. But all of these puzzle pieces fit together with planning. Take any one piece out and we've got a hole in our puzzle. So when we start building this puzzle for you, we want to make sure that we understand what you're trying to accomplish, not what Rick's trying to accomplish. That's not part of this. My job is to come up with the different strategies and designs that help you achieve your goals. But think about how we put this puzzle pieces together. How do they fit? And there again, everybody's going to be a little bit different. There's commonality. We have a lot of commonality, and I see, you can go down to the local office store and pull out a do-it-yourself will, a do-it-yourself trust. Is that what you really need? And the question is, I don't know. I don't know if it fits with what you're trying to do. Now, if you start thinking about this, as you start putting your plan together, there's going to be threats against your planning, things that can throw it off track. If you think about taxes, well, we deal with taxes, and we're going to hit this in a few more slides in detail, looking at the different types of taxes and how that can affect your planning. Think about your health. You know, we always plan on having, you know, I look at it and I talk to people about what their retirement is. What do you envision for retirement? None of us plan on being in a hospital bed. Nobody plans on not being out with friends and family and on a beach, playing golf, doing things in retirement that we want to do. But sometimes our health gets in the way. And we'll talk a little bit more about that. Think about creditors. How do we protect your assets from, you know, from being taken away? And if you want to talk about that, we'll talk a little bit more about some of the asset protection. But what do you need to protect? How best to protect it? And we'll talk through that. Finally, is time. You know, time is something that we don't have an infinite amount of time. But if we put off our planning, we start to get into a position where we may have missed some opportunities. So the older you get, we may have to speed up some of the planning, but the longer we have time to plan, the better the plan's going to be. There again, making sure that we're always updating that plan as we go through. When we look at income tax, or the things that can affect our income, and we all deal with these income tax, capital gains tax, payroll taxes. Those are taxes that currently take money out of your pocket and give it to Uncle Sam. Now, there's always the discussion with what's Uncle Sam's doing with your money, but it's no longer your choice. So when we start looking at planning, can we plan to keep more in your pocket, more money that you can use for your planning? There again, we're not doing anything that is, we don't ever want to get into the word shady, illegal, tax scam, shams, whatever. All of those things, we want to avoid it. There's no reason to even go down that path, but there's things that you can plan for. And there's ways to set up some of the planning. We'll get into this later on with charitable planning here in a couple months, but talking about how you can benefit your favorite charities, benefit your family, and just use the money that would have gone to Uncle Sam for your purposes. Some of the taxes that you may not be familiar with, and John kind of talked about this in the opening. If you don't plan, some of these taxes sneak up on people. Gift tax, estate tax, generation skipping, transfer taxes. Those may be taxes that you didn't even know existed. But it's one where at death, or when you're trying to pass some of your wealth to your kids or grandkids, if you don't do it in the right way, Uncle Sam can step in and take 40% of that. Or if you live in some states like Washington, Oregon, the states have estate taxes now in place. You know, there again, you've paid income tax along the way, you've paid your capital gain tax, and all of a sudden now Uncle Sam wants a bigger piece. So these are taxes, and a lot of times I will say these are voluntary taxes, and voluntary for those that didn't plan around it. So we want to make sure that we're always planning. When you think about planning, there again, a lot of people haven't dealt with their estate plan or aren't prepared for it yet. Let's just take a step back. Let's talk about if you were going to build your dream home today. If you're going to build your dream home today, do you just go out and start building? You know, get a couple 2x4s and start nailing the studs together, and all of a sudden you have your dream home. Now, I think we can all laugh about that a little bit. We'd never do that. Maybe we aren't even equipped, you know, to build the house. You know, do you know how to swing a hammer, put the screws in the studs in the right place? Can you put everything together to build that dream home? And you probably need a little help. But before you even get there, we're going to probably go hire an architect, somebody that can help us take that dream out of our head and put it on paper. And that's where this whole plan starts, is getting your dreams and goals out of your head and get it on paper. And if we start with the plan, now you can come back and look at that plan and say, is this really what I wanted? Now, if you haven't gone through building a house, it's a fun and frustrating process all at the same time. There's things that when we were building our home that honestly, I didn't really care what color the walls were. I wasn't in charge of picking the carpet. Now I know they need to be there, and somebody's going to help with, help us figure out the right things. But is the wall in the right place? Are the beams in the right place? All of that comes together. Then when you start building it, there's back and forth that's going to happen. The builder doesn't always take the plans and build it exactly that way. He may get to a spot where the builder says, you know what, things are off a little bit. And does he change it by himself? No, he talks to the owners, he talks to the architect and says, hey, I've come across a problem. Let's fix this before we build in a problem. Something that we know we can change. If we drop some extra outlets here, this is going to help you in the future. But think about that, just keep that in mind, that as you're building your legacy plan, it's no different than building a house. It's your dream house. It's your dream legacy plan. How do we want that to happen? When we get into starting the plan and starting the planning process, we have to take a step back. We have to gather information. And what we're gathering is information from you, so we understand who you are, what you have, and what's important to you. And I like saying this: garbage in, garbage out. If we don't take the time to really figure out what we're doing, if we don't take the time to figure out what you have, then it's not a plan, it's a prayer. And think about that difference there. Are we praying that this works out right, or are we planning for it to work out right? And anytime we're planning, we want to get good information. We want to make sure this is yours. I think the problem in today's world, we're used to Amazon. And I love Amazon, because it's one, if I need something, I don't have to leave my office and go pick something up at the store. I can, pull up the app on my phone. I can get on the computer. I can order whatever it is I need. And a lot of times now it's dropped off same day. We're used to a commoditized world. And with planning is not commoditized, it's individualized. And then this individual planning, it takes time, it takes effort to get the right result. So if we start looking at this, every plan has to have a foundation. And with this foundation, we're going to come in here and say, what is it we're trying to accomplish? And every plan is going to, may have different components, different parts, different strategies, but every single plan, just like a home, has to start with the foundation. Think about this initial foundation part of the plan as the umbrella over all of the planning. This is going to dictate or direct what happens during your lifetime. So not just when you die, but during your lifetime, what's going to happen. And things happen during our lifetimes. Maybe we lose a spouse. Maybe it's one where we mentally can't, manage our own affairs anymore. And eventually sometime we're going to pass away. During each phase here, we want this foundational plan to not have a gap. Think about if we had a gap in here where, let's just take it mentally, you cannot manage your affairs anymore. And you haven't passed away. You can't manage your affairs. If we haven't planned for that gap in there, then the plan wasn't complete. We want to make sure that we look at each phase and we take care of it. How do you want things if you're married? If I pass away first, how do I want my wife taken care of with my assets and her assets? Well, most of the time I want her to have full control to continue on using all of the assets. Now, that's what I want. Now the Uncle Sam steps in and says, if you don't do it the right way, then we can take away some of that. When my wife passes away, that's when they step in and maybe take 40% or more. And so it's there again, making sure this umbrella covers everything that we have. So when you start looking at this foundational plan, the very first thing is let's avoid the probate process. Now, probate, if you think about this, when I pass away, I'm not going to be using those assets anymore. Where do those assets go? Well, if I haven't set it up right, and we'll talk about how a trust plan would work versus using a will, but if all I have is a will, or if I have no will, now the court has to get involved and decide, transfer those assets where they're supposed to go. Either where I say they go or where the state says they go. Those are two different things. But it's one where the court's involved. Guess who's paying the bill? If the attorneys are involved, you're paying the bill. And I guarantee the attorneys, at least one, if not more, are involved. And now everybody gets to see what's happening in that process. So what we want in that foundational process is we want to avoid probate. We want to take that next step. Who are your heirs? Who is it that's going to benefit from your assets? What is it that you want to pass on, and to who? So there again, we need to know, is it children? Is it grandchildren? Is it other family members? Is it going to charity? This is where you get to choose who that goes to. But we need to identify who those people are. Now, this is where we get into legacy. Legacy, I think, encapsulates more than estate planning. When we say estate planning, it's more of what happens when to my assets when I die. And I think this is more than just passing on assets. This is not just my bank account goes to my kids. It's how do I want to pass it on? What do I want to be remembered for? If you think about this, start thinking about families that you know, or it could be you. Do you have children or grandchildren, or their special needs children? People that are going to need extra help. Are they being taken care of the right way? Is there enough money set aside to take care of them? I was working with a client not too long ago that they have a special needs son. They've really worked hard with him so that he has a normal life. But when they put their planning together, they didn't set enough aside to take care of him. If they pass away, their son is going to struggle because there's not the assets or income to take care of him. So we want to make sure we address that. Do you want your children, grandchildren, great-grandchildren to have an education? Do you want to help with that educational plan? Education's expensive. And so can we help people get a leg up? This is there again, these are your assets. How do you want to pass them on? Do you want strings attached? No strings attached? There again, it's up to you. When we look at revocable trust, now you can set up your foundational plan either in a will or you can set it up in a trust. Basically, the guts of this are going to be the same. And if you think about the guts of, meaning if you pass away, here it goes. Here's where you want your legacy, to pass on. Now, if you have a will and only a will, we have to now get the courts involved in order to pass this on, because you can't transfer the assets and you haven't put people in place to do that. If we use a revocable trust versus a will, this, in essence, this is a will substitute. We have better control, better management. And like if I look at my revocable trust, when I pass away, all my wife has to do is go down to the bank and take my name off the checking account, because obviously I'm not signing any more checks, and she's got full control of everything. When she passes away, we've got it set up for our kids to take over. It just passes on to them as well. So we've avoided all that cost of probate. We know who's going to be in control, easily managed. The other thing that's nice about a revocable trust, there's nobody looking in and seeing what we have. You know, those prying eyes, you know, the neighbors, want to know, what did Rick have? Well, if I'm in court, they get to see everything. If I avoid the court, they don't ever get to see what I have. Now, I think here's the next big part. You can amend this. You can change this. It's a revocable living trust is really how this is set up. So there again, as your goals, your desires, your plan changes over time, we can always go back and change this. Now, I'll tell you, here's a statistic that I think is just sad. The average estate plan, and you heard John, say up front about, half of the people actually set up their original estate plan. Well, those that don't make any changes for 19.2 years. Think back 19.2 years, what your life was like. Now think 19.2 years into the future, how different that's going to be. We want to make sure that we're reviewing, changing, updating. So this is you're getting on the path. Let's just stay with it and keep it going. But as we start looking at this, one of the things that we'll talk about is protecting your assets. The revocable trust doesn't provide any protection, but it does set up the foundation that we can build that on. If I look at all of the foundational documents, this is really the list of what you need. You need the revocable trust. You do need a will. And that will just says, whoops, think whoops. Whoops, we left something out of our trust that should have been in there. And so now let's put that asset into the trust. So if we do have a probate, it's very, very small. It's simple. We're putting things into the trust. The powers of attorney, I think, are very important here, because the durable power of attorney says any asset that's not in the trust, if I can't manage my affairs, and I can tell you there is a specific asset that we will never put in the trust, and that's your retirement accounts. Those should not be in the trust. But there again, if I can't manage those, my wife steps in as my agent in charge under my durable power of attorney, and she can make decisions on my retirement account. My healthcare power of attorney, that one is important because now I can have somebody, if I can't make decisions for myself from a medical perspective, now who's going to make those choices for me? Who's going to follow through with my wishes? If you don't make those decisions, then the court gets involved, and they may not put somebody in charge of your decisions that knows what you want, how you want your care for healthcare. And finally, living will, what do you want for end of life care? So these documents set up the foundation that we're always going to be basing our planning on. There again, what you need to remember is make sure it's your wishes, your plan. Don't leave this up to the court to decide how you're going to be taken care of. Now that you have the foundation in place, now that you know that here's how I want things to work, now we can start getting more and more specific in our strategies and in our planning. The first thing is protection. We want to make sure that your assets are protected from outside interest. If you want to talk asset protection, I'm going to put a thought into your mind, and when you want to talk think about asset protection, here's the example I want you to remember. If I'm in the middle of the crosswalk and you run over me, I'm in the crosswalk, I'm injured, I'm going to sue you. And if I sue you and I've been in the crosswalk, I guarantee, I don't care what state you're in, I'm going to win. Now, when I win that lawsuit, what can I take away from you? What is protected away? So there again, I'm going to get your car insurance and whatever else. So think about that. What are you protecting away from? What we want to start looking at is, can we build a wall of protection? Can we protect everything that you have? Think about this. If think about your home. Do you have a fence around your home? Most people do. Do you lock the front door to your house after you go in? Do you lock the car doors when you get out? All of those things, if you think about, we're trying to protect something. Here we want to do the protection for your assets. So as part of your planning, we don't have these inadvertent, creditors stepping in and taking things away. And when I say protection, I want to expand that out, not just creditors. And when I talk creditors, there again, we're not trying to avoid debt. If you've gotten a loan on your home, you've got to pay it off. We're not protecting from that creditor, but you're protecting from me coming in and suing you. But other things we want to protect from, think about this: income tax, estate tax, gift tax, those taxes that are going to take money out of your plan because you didn't prepare for it. Probate, costs that are going to eat into the legacy that you're passing on because you didn't plan. We were talking a little bit before we got on the call, and I had a client a couple of years ago that went through probate. Now here's the situation. When I first met them, I realized how their assets were structured. And at the point, Dad was very close to end of life. And when I found out they had a piece of property in New York, they lived in California. And I can tell you this, those are the two most expensive states to probate in. When I met them, Dad was already on end of life care. I got all of their documents. I stayed up that night to see if we could fix the problem. Called them at 8 o'clock the next morning. I said, we can get the attorneys involved. I've got them on ready to go. It's going to cost about $5,000 to take care of the problem. And they said, Dad passed away last night. So that little whoops, because they didn't have things in the right spot, cost them over $1 million in legal fees to get to the exact same spot that could have been done in 4 hours for $5,000. I'd like to say they're in a better spot, but they're not. They're in the exact same spot. So when you start looking at this protection, I want to provide, put these plans together that provide protection for you so that you're spending your assets, your money, those things that you've worked hard for. I want you to be able to spend them how you want to, not because somebody else came and took it away. Finally, let's, as we start looking at creating your legacy, really, what does that mean? And I start thinking of legacy planning as, what is it beyond you? What is it that you want to be remembered for? And as you think about that, there again, when we pass away, we're going to be passing on assets. But you start looking about, who are we passing them to? How are we going to pass that to them? It's more than just the value, but it's one of those where, we want to make sure that we're passing it, those assets in a way that are meaningful. I looked up this statistic because I really wanted to know what it was. 70% of all lottery winners are broke within 5 years. Think about that. Why? Why did they won the lottery, and in 5 years, because of their spending and bad decisions, that money is gone. What money that could have been, a blessing to them. But you start thinking about that, it wasn't real to them. They weren't prepared for it. What we want to look at in the legacy planning is, can we do better? Can we provide an educational system? So think about this. if you have young kids, if you were to pass away today with young kids, who's going to teach them how to use that money that you've passed on? Or are they just going to be lottery winners when it's handed to them and the money's gone within 5 years? So you start thinking about this. If you're not there, what do you want to encourage? Do you want to pass on a legacy of charitable giving? Do you want to pass on a legacy of education and higher learning? Do you want to pass on a legacy of building a business, working in the trades? Whatever that legacy is, can you not, go beyond the value of what you're passing to how you're passing it? And you can protect that legacy. There again, most people, when they pass on, if I review an estate plan, most estate plans say if I pass away, give it to my kids, maybe a third when they're 25, a third when they're 30, or a third when they're 35, or some combination, but it's usually done in thirds. Now, go back to if you've ran over me in crosswalk, but let's change that. Your children ran over me in a crosswalk. One of your kids that is an heir of your estate has run over me in a crosswalk. I've got a judgment. I've won the lawsuit. I've got a judgment. I'm just waiting to collect. Well, as soon as that money comes through in their inheritance, I take it away. But I can tell you, your planning can be set up to where your inheritance passed on to your kids or grandkids cannot be taken away by me in that lawsuit. So there again, just doing it the right way makes so much of a difference in how your plan is going to be, structured. Part of the legacy, I think, is charitable giving. You can give to charity during life. You can give to charity at your passing. It's also one, and we'll talk about this when we get into the charitable planning here in a couple months. You're going to see that there is a lot of tax incentives to give to charity. Congress knew this a long, long time ago, that there's things that charities can do that government can never do efficiently. And so by giving more to charity, you can reduce your income tax, you can reduce your estate tax, you can benefit the charity and those that the charity provides the benefits to. It really creates an opportunity for you to, create that legacy beyond you, beyond your family, and really benefit, those that you have come to love. The last part of legacy is you can create this for multiple generations. I see that, I've seen this, as I see people, first, before they have kids, that their forward thinking in time is very, very limited. Then they have kids and they can see not only their lifetime, but what their kids can accomplish. Then I see, when people become grandparents, they can see even further down the road. You can set up planning that can last for generations. And it's not as difficult as you think, but as you start thinking about that legacy, start thinking about how many people you can affect, not just now, but into the future. And we can put a lot of that in place. Now, let's go back to building this home, building your dream home, building your dream plan. If on your dream home, we were building that plan and stopped with the architect, what would your dream home look like? Well, it'd look like a piece of paper. And a lot of times what I see in the planning, people have gone to an attorney or somebody to put the paper together. And they may have even put the right paper together. But until we fully implement this plan, it's not going to accomplish what you want it to do. Think about this. Look here on the left at all, I just pulled off general, accounts that I think most people have, or assets. Now, right now, if you don't have a plan in place, all of those are titled in your name. There again, if they're in your name, At your death, that's subject to probate. If you get sued because you ran over me in a crosswalk, I can take all of that away. Now we start moving forward in the plan. And this is just some things that we've got the revocable trust. Now, under that revocable trust, I'm going to look at how I want certain assets titled. And this matters because how things are titled really affect the plan. Do I want it in the trust? Maybe we set up, a limited liability company for some asset protection. Some things I want you to own individually, but everything needs to be in the right spot. If it's not in the right spot, you're going to end up in probate. You're going to be subject potentially to the creditors. Those things, until we start implementing it, really don't affect. It's not in effect because we didn't take this thing and get to the finality of where we wanted to be. Your plan is not complete until everything is in the right spot. So if I look at this, thinking about the steps to implement your plan, the first thing is we need the legal documents. Okay, we've taken the time, we've built this plan. Think about when I think where a lot of people, get hung up. You don't want to be sold something. Think about if you want to go buy a car today. If you go buy the car today and you have in your mind, I want a red car and I want to have all these certain bells and whistles in the car. So when you go on the car lot, maybe all they have is blue cars. And is that really what you want? No, you wanted a red car. Now think about if you go onto the car lot and they've got red cars and blue cars. Well, which car are you going to buy? Well, you're going to go over to the window and you're going to go through all of the things on that window sticker that say, this is what's in the car. Until you find the car that you want, you're not going to buy it. Now, the salesman's sitting there saying, hey, I'm pushing blue cars today because I got to get them off my lot. I'll make you a deal on a blue car. Is that really what you want? Or are you going to take the time to figure out what you want and buy what you want? Same thing when we get to the legal documents. We want to make sure that we're getting the right, we've put our plan in place. We've designed this plan. Now think about it. We've got this plan. Now we're going to go start putting all the things into this plan. We're going to buy goods and services, whatever it is, to complete our plan. The first thing is the legal documents. We need that. That's going to get us started down that path of implementing the plan. Now, things that might come into this plan. Life insurance might be an element of the plan. But I can also tell you this, life insurance might not be an element of the plan. Is life insurance a good strategy? Yes. Is it the right strategy for you? I don't know. Until we get that plan designed, we won't know what we're putting into this to get it implemented until we have the plan. We've talked about long-term care as, there again, we'll talk about it more next month. But if you think about long-term care, think about, do you envision yourself needing help in your later years? Most of us don't want that to happen. In fact, all of us probably don't want that to happen. Statistically, it's going to happen. So we want to make sure it's addressed in your plan. How you address that depends on your situation. But we want to make sure we look at it, we address it. There again, your decision, and your decisions are always going to be made with good information and your goals and objectives in mind. Your investments. And why do I include this as part of the implementation of your plan? Well, do your investments match up to your plan? A lot of times, it's one where I think these two go together, investments and retirement. If you think about this, we're always building. We're always building for the future. Think about that build towards retirement. This magical time where we retire, and I see a lot of the planning that's done is to get us to retirement. Our investments are made to get us to retirement. But how do we spend it? What happens when we get to retirement? Do we have a plan of how we start spending these assets in reverse? What assets we spend first? What do we want to keep for the final assets? What assets are we using for long-term care? All of these decisions should be already made in the plan. Now we're just making sure that they match up to exactly what you want. I'm working with a client right now. They've built and built and built, always to get to retirement. Now they're at retirement, and you know what they never thought of was, what are taxes like in retirement? And now they've locked in all of this income that's pushed them into the top tax brackets, and they're asking, how do we save money? Well, it's one where they're already there, and so I'd say we're doing late stage planning. Late stage retirement planning, because we're trying to figure out how to get Uncle Sam out of their pocket. Well, if they had taken these steps 10 years ago, 15 years ago, be a different picture. So there again, as we want to implement everything the right way. And there again, it's part of your plan. Medicare planning, you've got Jim. I can tell you, Jim is my resource for anything Medicare. So if anybody asks me Medicare, my answer is Jim Maher. There again, we want an expert that can say, here's how you're going to implement this into your planning. Here's how that's going to help you fulfill what you have in your plan. There again, everybody's going to be different. Everybody's going to have different goals and objectives. All these steps to implement are just really making sure your plan gets you where you want. Finally, as we're looking at ways to build out and implement your plan, we always want to see, can we leverage your money? One of the things that I've found throughout the planning process, there's never enough money. But the answer is there is enough money. It's just there's competing objectives, competing goals. We want to make sure we take advantage of every way we can to leverage your money. There again, to fulfill your wants and goals in your planning process. There's no right or wrong to it. It's just what fulfills the final parts of your plan. I stole this slide from Jim because I think this really comes down to what we want to convey from these webinars. If you have questions, let's answer them. We're happy to get on a call, happy to do Zoom calls, but it really is, as you get into this journey on doing your planning, I say it's not difficult, it's new. And what we want to make sure is you understand what your different options are, because there always are options. The closer we get to the end, the options get fewer and fewer, and the timing just gets to be a little troubling. We don't ever want to rush, but we want to move quick to get the plan in place. But as you have questions, we're always here as a resource to make sure we can get those questions answered. So I appreciate your time, John. I'll turn it back over to you.
Rick, that was great. Thank you. Well, I don't see any questions we can certainly end easily today. If those of you that are in the audience, if you would like to share any questions that you might have, that's so helpful to methodically walk us through that, Rick. It's just so valuable.
Thanks.
Just you see the human side of it, if you will, in terms of, gosh, when things don't go right, or the story that you shared about the family whose dad passed. I mean, how many times have we all heard, yep, the documents were there and didn't get to him or her in time to sign them, and my golly, it's so challenging. So why don't we wait one more minute? There we go. There's a question. Thank you. Let's see. Please give examples of leveraging my money. Good question.
I think, the easy ones on leveraging, I'll take life insurance and long-term care as two potential ways to leverage. If you think about life insurance, I see life, a lot of times when we're talking about life insurance, the question, people look at it as an expense. And there is an expense element to this, but think about this, you could be putting $1,000 away, and I'll just say per year, and maybe getting $100,000 of death benefit. And there again, we've leveraged potentially $1,000 into $100,000. And there again, it's does it fit? Same thing with long-term care, and as we hit into long-term care next month with Jim, what I see from long-term care, most people don't want to, number one, none of us want to have a long-term care situation. Statistically, at least 70% of us will need long-term care. But if I look at that, you can, even if, when I work with wealthier clients, they have the ability to write the check to cover that long-term care expense. But can we do better? Think about this. If the cost of care is going to be $500,000, well, maybe we can set aside $200,000 to cover the $500,000 of care. So there again, putting a cap on your exposure of $200,000, so you can use that other $300,000 for other parts of your plan. And I go back to the life insurance. Like I work with a lot of businesses, and when a business owner dies, the other partners have to pay to buy them out of the business. Well, it's one. In fact, I just went through this with a client that passed away. The cost of their total cost of their life insurance was $200,000 to pay for about a $1.5 million purchase. Now, could they have paid the $1.5 million over time? Yes. But there again, tax-wise, paying interest, all of those things, this was the most efficient way for them to pay the bill. So there again, we're always looking, can we leverage, can we find ways to use your money the best way possible?
Thank you, Rick. Well, it looks like we have all of our questions for now. We will have question and answers. So please send in your questions or bring them next Thursday or this coming Thursday. So let's just close and say, Rick, thank you for explaining legacy planning so clearly. It's so important. And as you know, Ardenwood is one of the charitable nonprofit organizations we hope you'll consider as a beneficiary in your estate. That's my job and our job. But so much more important, I think, is the peace within families, the good planning, all those types of things. But as you know, donors are invaluable to our work, so we want to present that. Your contributions enable us to provide all our Christian Science nurses and education and care services, as well as events like this one. So you really do bring out the best in us. So thank you, one and all, again for joining us today. We look forward to seeing you this Thursday afternoon for a Q&A. Same time, same Zoom link. You'll receive a reminder email with a link in it. And once again, this will be rebroadcast in the next couple of days. And also, I just wanted to say we have several upcoming events to tell you about. In October, there'll be two more webinars on estate planning on the 4th and 6th of October, and two webinars on Medicare for Christian Scientists. Those are on the 11th and the 13th. In November, our last estate planning workshops will be November 1st and 3rd. And also in November, we would like to invite you to join us for an online Bible workshop on health and healing, presented by Evan McDonald on Saturday, November 5th. Evan's Bible research and inspiration never leave you where you started. So please put that on your calendar. Also in December, our annual Christmas celebration is Sunday afternoon, December 4th. We hope you, your family, and friends will join us online. And you can find details and register for all of our online events on our website at ardenwood.org. So thank you all, and goodbye for now.